All right. Hello, everybody. Welcome back to another episode of The Market Close. It is Monday, August 18th, 3:45 p.m. Eastern. I am not late, even though everyone's spamming late in the chat. We are on time, and we got a lot to talk about. We got Palo Alto Network earnings after the bell. That's the only company that has earnings after the bell. That is one of the most important companies in the cybersecurity space, so we will be getting into them and discussing what we've got with Palo Alto. Are you guys still spamming late, dude? I'm here. I'm on time. I'm like in the morning. I get it. I was 2 minutes late, but here I'm on time. And we also have Ukraine and Trump. The meeting has happened. There's a lot to talk about, a lot to dissect. We are going to get into it, but folks, it was a pretty good meeting. And I know everyone had their hesitations on would the meeting be good? Would there be a blow up? Would they be aggressive? Would they be excited? Would they be, annoyed with each other? The meeting ended up being pretty good, and the clips that I'm going to show everybody from the lunch that the European leaders had with Trump and Zelenskyy, all of them together at the same table, that was also pretty damn good. So you had a good meeting with Trump and Zelenskyy in the Oval Office, and then you had a pretty good meeting with Trump, Zelenskyy, and the European leaders, like the Secretary of NATO, the Prime Minister of the UK and France. And so things are looking okay. Now, obviously, we are far from a deal, but Trump and Zelenskyy right now are starting the closed door conversation. Everything they did for the past 3 hours has been in front of the media. They are now officially going behind doors and seeing if they can negotiate something. Based on what I saw, Robin right here trying to get to 115 in the press conference, it does feel like both sides want to get to a deal, and hopefully that happens. But we're just gonna have to see if that ends up playing out. Robinhood right here, 114.91, Palantir 173, Tessie 334, trying to get to 335, Nvidia 182. S&P 500 has been pretty flat all day. It's up 0.04%. I think when I left during the market open, it was down 0.09%. So not that big of a move. SoFi, actually really good move today. I think this is going to be one of the first, or this is going to be the second close over 24 in the last month. So this will be really good. It looks like in the next 14 minutes, SoFi will get that $24 close. Grab right here, 511. Reddit down about 2% on the day. Reddit was at 253 at one point today. Meta 770. You had some concerns around the AI CapEx spend trade that we'll talk about, which is why Meta was down. Salesforce flat on the day. I mean, it's been a relatively flat day. Bitcoin from 115.2 to 116.3. Again, kind of flat. Ethereum, it was 4,300 when I left. It's at 4,358. And then BMNR, I think, is down 2%. It's down 4%. It was down 7% at one point today. So nothing too crazy. Now, you do have some movers like an Opendoor that's up 20%. This was up 20% in the morning. Then it fell all the way down to 340. Now it's back to 380. Looks like it might get a close above 350, but that's been pretty volatile today. It did not get above $4. That was at 395. Oscar, great mover today. Oscar, there you go, 1687. It did hit 1695, trying to break through that 17. And then UNH, I still think, is at 312. UNH is at 310. So that's up 2% on the day. You have some movers across the entire market, but broadly speaking, the S&P 500 was flat. The broader market was flat. Max 7s, you got some that are up, some that are down. Robinhood breaking out a little bit today, back above 115. But outside of that, not too much crazy price action. Let's get into Ukraine and Trump. I'm going to play a couple clips, and then we'll get into everything going on from the analytical perspective. Here is the first thing that happened at the meeting. It was a joke about the suit between Zelenskyy and Trump.
President Zelenskyy, you look fabulous in that suit. I said the same thing. Yeah, you look good. I said the same thing. Yeah, looks good. I said to the one that attacked you last time. See, that was I remember that. Yeah, I apologize to you. You look wonderful. No, my first question for you, President Zelenskyy.
In the same suit. You see, I changed you.
Maybe yours is much better. President.
So I thought this was really important because, as Farzad says right here, the joke was a 10 out of 10. It was a great joke. But number two, it showed that they were able to play it off. It showed that it wasn't this like big thorn that they had to deal with. It wasn't this elephant in the room. Like, they were able to play it off, make a joke about it. Zelenskyy made a really good joke saying, hey, you're still in the same suit. At least I changed my suit. Kind of throwing some shade at the reporter, which he probably deserves to get, given the reporter brought it up last time. And they moved on from it. And so I thought that was one of the first parts of the meeting that made it seem like, okay, things might be okay. And then here's a couple clips from the luncheon that Zelenskyy had with the rest of the European leaders.
Conversation with President Trump.
Very good.
And it really was the best one, maybe the best one will be in the future. But it was really good. And we spoke about very sensitive points. Thank you so much. I think that...
Here is the Secretary General of NATO.
I really want to thank you, President of the United States, dear Donald, for the fact that you, as I said before, broke the deadlock basically with President Putin by starting that dialogue. And I think it was in February that you had the first phone call. And from there, we are now where we are today. And that is, I think, if we play this well, we could end this. And we have to end this. We have to stop the killing. We have to stop the destruction of Ukraine's infrastructure. It is a terrible war. So I'm really excited. I really want to thank you.
And then here's the European Commissioner President.
Indeed, we are here, Europeans, as friends and allies. We had a fantastic NATO summit. Together as the two largest and biggest economies in the world, we had the largest trade deal ever agreed. And now we are here to work together with you on a just and lasting peace for Ukraine. Stop the killing. This is really our common interest. Stop the killing. Indeed.
And then this is Macron from France.
Thank you, Mr. President, for organizing this meeting and for your commitment. And everything was said, but I just have to say here, everybody around this table is in favor of peace. And we work very hard, and we've worked very hard during the past few years to have a peace which is a robust and long-standing peace. This is why the idea of a trilateral meeting is very important, because this is the only way to fix it. Thank you, Mr.
So based on all these clips, if you want to watch the entire meeting, it's on the White House channel, and you can watch I think it was like a 30-minute meeting of all the leaders together. But based on the clips that I just showed and based on what I saw, I did listen to the entire conference between Trump and Zelenskyy. I mean, dude, it seems like they want to make a deal. Now, the number one thing that Trump promised, which is one of the reasons why, yes, Germany was there, was why Zelenskyy, I think, was in a good move, is because Trump promised verbatim that they would give a guarantee of security to Ukraine. Now, that does not mean they're getting into NATO. Obviously, that's a no-no, and Russia would go crazy if that happened. But even if you're not in NATO, if you have some of the security measures that are granted, aka you have U.S. troops on the border in case anything were to happen, so then if Russia actually attacks, they're attacking the United States, not just Ukraine. That is something that Ukraine was looking for. Now, based on what Trump said, he didn't explicitly say this, but based on the way if you kind of read between the lines, he basically said Putin is okay with the United States giving Ukraine security clearance, even if they don't allow them into NATO. That would be a big no for Putin, and that would, that just would not be a starting point for a deal. But he's okay with the fact that we could end the war if we are, and Ukraine could still get security clearance from the United States. And I think that is why the European leaders were actually really happy, and they were in a good mood during this lunch, because they're like, okay, if Ukraine gets security clearance, that's like one thing that's really good. That means it's not just the US, or it's not just the EU protecting them, it's also the United States. The United States is a really big military, so that's important. But number two, if Ukraine and Zelenskyy is willing to negotiate on anything in regard to the land in order to get security clearance from the United States, which I don't know if that's the case, but based on how Zelenskyy was talking, it looks like he seems like he's ready to negotiate. There's a world where this war actually could come to an end. Don't know if it's going to happen. Obviously, anything can change. Maybe Putin was lying, and we'll find out over the coming weeks how this ends up playing out. But it does feel like this was a productive meeting, and if the markets wanted to see some level of peace, some level of commitment to that peace, it seems like that could be playing out right now.
Where they did not seem to be on the same page, and you did detect a little bit of a disagreement in the room. The idea that Merz was saying, I don't think we can move forward with a trilateral meeting unless there's a ceasefire in place. President Trump very much wants that trilateral meeting with himself, Vladimir Putin, and Volodymyr Zelenskyy to do what would be a historic peace deal here. The Chancellor of Germany is saying, well, wait a second, we might not be ready to go forward with that. So that was the area where I think there was the most, conflict in this room, to the extent that there was any. But both Zelenskyy and Trump here really at pains to suggest that they had a very positive one-on-one meeting behind closed doors, which lasted, by our count, about an hour's time off camera between the two men and presumably aides and staffers on both sides.
So as you can see right there, minute differences of concerns that different countries are going to bring up. Germany having some concerns about the trilateral meeting on how this would take place. But at its core, it seems like Zelenskyy and Trump really did want to come to an agreement here. And they signaled, at least, even if it's just faking it for now, they signaled to the media that they want to try to come to an agreement. which I think is rather bullish. And there's obviously going to be a lot of different things they have to negotiate. I don't expect there to be any deal anytime soon. But if the markets wanted to price in some level of, hey, there's a shot, there's a chance this thing can actually end over the coming at least months, if not by the end of the year, then it seems like today there's a chance that takes place. Rocket Lab right here, 45. That was up 7% on the day. That's up 2% now. SoFi 24.20. Looks like it will get the $24 close. We got 5 minutes left. CoreWeave. Did not see that one on the day. That one's down. So CoreWeave getting a little bit of a hit. Again, the CEO did sell 3 million shares on Friday. So that's why that one took a hit. Duolingo, wow, 13%. I haven't looked at Duolingo all day either. So there you go. That one is also green. Yeah, let's do pump or dump in the chat on Palo Alto. Let me know who's loaded up on this one. I am not playing this. If I had to guess, I would say pump because they've already dumped a ton over the past couple weeks. So my gut feeling would be a pump on any good news. But we will find out after the bell and see what ends up happening. So that's what you have on Palo Alto. Duolingo again, 369. Roblox, that's up 2.69%. Robinhood, 114.94. By the way, you know how Carp is going to be at the All-In Summit? Well, folks, someone else is going to be there as well. And you might recognize them. Ladies and gentlemen, Vlad will be at the All-In Summit.
I am Vlad Tenev, the founder of Robinhood.
We're talking about Robinhood. The stock's more than doubled since this last report.
While revenue jumped 45% from a year ago.
Its stock surged 180% this year after nearly doubling in 2024.
Shares of the trading platform now up more than 400% in the last year.
Glad your presence there speaks volumes.
Robinhood Gold, which hit a record 3.5 million subscribers.
Most financial services get worse the more money you have, but we wanted to kind of invert that and bring the entire Robinhood ecosystem on chain. Active trader market is pretty niche. They push us to be at the frontier of technology and innovation. I believe this can solve one of the greatest long-standing iniquities in our capital markets today.
Dude, Carp and Vlad at the summit. That was not my edit, by the way. That was the All-In podcast. They made that edit on their Twitter account. Carp and Vlad, dude. That's gonna be fun. That is going to be exciting, dude. Both of them on stage. I mean, this is going to be a fun summit. This is going to be a fun summit. I'm not going to be there. I'm not going to be there on September 7th. I wish I could. That would be fun. That would be fun to be there. But look, if you are going to the All-In Summit, have fun. I mean, I think Vlad and Carp are the two most high-profile people that have been announced. I think they're going to start announcing everyone over the next coming days. That'll be fun. So good stuff. We'll see what happens in September. We got Tesla running a little bit into the close right here. 335.29. That's up about 1.43%. NVIDIA right there, 182. SPET now up 1% on the day. Again, that one was down a little bit as well, about 4% in the morning. That one is now green, 1%. UNH, 308, selling off a little bit from 312, but still green. We got the market close in about a minute and a half. Accelera, that's up 1.6. SoFi, 24. Looks like it's going to get that close. Ethereum, 43.60. And then the S&P pretty much flat on the day, which is not too bad. Palo Alto stock for the year is down 2%. Okay, so the stock's flat. Over the past 6 months, it's down 15%. Yeah, I'm saying pump. It's down 15% in the past 6 months. I'm saying pump. I'm saying any piece of good news, this thing's going to pump. But it's a pure guess. I don't know that much about their business. I do think cybersecurity in general, like CrowdStrike got a downgrade the other day. There are some estimates that are being like taken down. So if Palo Alto comes within those estimates or comes below those estimates, yeah, I think the thing could dump. But if there's any bit of good news, maybe this one pumps, and we're going to see once we get into this market close. 63% of you say pump. All right, we're about to find out in a couple minutes. Thank you, everybody, for being here. It is Monday, August 18th, 4 p.m. The stock market is now closed. All right, S&P, flat day. I'll take it. I will take it. S&P is trading at all-time highs. We don't need to go that much higher. We don't need to go that much lower. If we can just hold these levels until we get some more catalyst, then I'm happy with that. S&P 500 right there, 643. Tesla, 335. Not to mention, we got Palo on Friday, so I think we will get some flat trading action until Friday And then we're going to have to see what Pal says. Opendoor ends up today, 19%. Not too bad. Hoodie gets the 115 close. It's been a minute, but Hood gets the 115 close. The stock was at 107 last Friday. Now it's at 115. Not too bad. BMNR, 54.75. That's down 5%. NVIDIA, 182, basically flat on the day. Palantir, down 1.77. We will talk a little bit more about that Palantir short because I found out some news about Andrew Left and some things he's going through. And I think there's a reason he said it's going to $40 today, and he publicized his short report. Let's just say he's dealing with some legal issues, and I think he wanted to distract the attention. Oscar right here, 16.65, 6.5% on the day. That's green. Celsius, that's up 7% on the day. UNH, that's up 2%. Unity, that's up 1%. ASTS, that's flat. Rocket Lab, that's flat. SoFi, $24 close. Not too bad. Ethereum, 4,300. Duolingo, 370. Not bad. Up 13%. They did get upgraded today by KeyBank to 450. The nature of the upgrade was, hey, ignore the GPT AI killing Duolingo, focus on the growth. And it looks like people bought the stock today, potentially based on that upgrade. SMCI right here, 45.86. Micron, 123. That's up 2%. Lululemon, that's up 2.6. Google, we'll talk more about that. Chris Camillo did say he is short this morning on Google. He clarified how short he is. So we'll talk more about this later as well. But you got Google that was slightly right on the day at 203.50. And that's what we got. Zeta, that was up 3% on the day. APLD hit all-time highs. They announced a $3 billion data center in North Dakota this morning. And that's why the stock got some momentum. So this one right here is up 15% based on that new data center deal. Okay, Palo Alto, we should be getting results very soon. I think they tend to be quick. They don't wait until 4:10. So let me pull up their earnings, or let me at least pull up their website and see what we get. And then we'll talk about some of the other headlines we have outside of Palo Alto. Is this it? No, it's not out yet. All right, so we should be getting soon. Now, last quarter, they grew revenue 15% to $2.3 billion. Their security ARR grew 34%, and their RPO, remaining performance obligation, grew 19%. So I would imagine the street wants to see some increased acceleration from those levels in order to get excited about Palo Alto. The street expectation on this name, they want 89 cents a share, and they want $2.5 billion in revenue. 89 cents a share and $2.5 billion in revenue, which is what we're going to need to see for Palo Alto. Yes, Robinhood did get the 115 close. Robinhood is also doing a Reddit Ask Me Anything, which is when you're allowed to ask questions for a certain amount of time. And in this case, the CEO and the crypto GM are going to be answering questions. So they're doing that on Thursday, August 21st in the morning. And just more engagement with their users, which I think is very bullish. You got banking coming in the fall. You have the summit launching soon. You have Hood Gold month. We're going to get the first drop of that Hood Gold month giveaway tomorrow. And now they're furthering that engagement by doing a Reddit AMA. So I think that is not a bad thing at all. Now, that Palantir update, let me give it to you guys real quick. So Andrew Left, the short seller from Citron Research, here's what was announced today. Andrew Left has been indicted in the Central District of California on security fraud charges, including 17 counts of fraud, 1 count of running a securities fraud scheme, and 1 count of making false statements to investigators. Prosecutors allege he manipulated markets by using his media presence and online publications to push misleading stock recommendations while secretly coordinating with hedge funds and profiting over $16 million. A pretrial motion hearing is scheduled for today, August 18th. So the guy who's trying to convince everyone that Palantir is going to fall 75% from here and use his media presence to make the claim that Palantir will have a 75% drop is also being accused of working with hedge funds to engage in securities fraud and manipulate stocks in order to profit from them. I mean, dude, if we were going to get any short seller on Palantir, I'm happy it's this guy. Because this guy, look, I don't know if he's going to be right or wrong on this, but the fact that his reputation in and of itself is littered with securities fraud. I mean, if that's the guy that wants to be the big high profile short, then be my guest. I'd rather it be him than other people, because the other notable shorts are not shorting Palantir for a reason. And I read Andrew's report today, by the way. All of it was just about valuation. I'm like, dude, if it was so easy to short Palantir on valuation, everyone would be short Palantir. It's not been easy to do that. And if you draw the line at 180, then okay, we're going to see what happens. But for a 75% drawdown after being accused of manipulating markets and being in a literal court case around manipulation, if he tries to manipulate Palantir or publish certain types of media, it's just going to feed into that narrative of potentially him engaging in securities fraud again. So it's just a messy situation. But Palantir right here was down about 1.64% of the day. and that was down. All right, Palo Alto, do we have a pump? Do we have a pump? Do we have it? PANW. Let's see. Oh, we got it's a little pump. It's not a big pump, but you do have 2.5%. Now it's 3%. Now it's 4%. Okay, that green candle continues to go up. Let's see. Let me see. Again, 2.5 billion is what they needed. Okay, they beat on the top and the bottom. 95 cents versus 89 cents on EPS. EPS is up 27% year over year. They beat by 7%. Revenue 2.53 versus 2.5. 2.53 versus 2.5. They beat by 1%. Palo Alto now up 5. Not a crazy beat, but for a company that's down 15% over the past 6 months, it's also not horrible that they're putting up this type of or they're putting up these types of numbers. Again, I don't think they were expected to have some massive growth numbers. This is a much more mature company. They also just acquired a company for $25 billion, but you do have a 5% pump. You do have a 5% pump on Palo Alto. We'll try to go deeper into their numbers. Let me see if they pulled it up on the website. And then we'll see specifically where they're growing or where they might be not growing as much. Look, this is not a bad. Yeah, it's not up on the website yet. This is not a bad. This is not a bad report. I think this is. Oh no, it's up. Here it is. All right, let's look at it. I mean, relatively strong. This is what the street wanted. They wanted a double beat. You got a double beat, not a major double beat, but still not too bad. Fiscal fourth quarter revenue 16% year over year, 2.5 billion. Security ARR grew 32%, so that's down quarter over quarter. Obviously, that's up still year over year by 32%, which is good. That's 5.6 billion. Oh, this is a big one. Oh, if I was the street, I would be pretty happy about that. RPO grew 24%. Last quarter, that was 13%. That's more than a double on RPO growth quarter over quarter to now 15.8 billion. That number was 13.5 billion in Q2 or Q1. That number to me seems like the most exciting number out of all that. Again, remaining performance obligations is revenue they will eventually be able to collect in the future if they're able to perform to the standards of their clients that they set out to get. Usually, if you're a really good software company, you're able to get those deals. That's just a backlog of revenue that you should be able to get. CEO says, our strong execution in Q4 reflects a fundamental market shift in which customers understand that a fragmented defense is no defense at all against modern threats. They are partnering with us because our platforms are designed to work in concert, creating powerful operational synergies that deliver superior near-term outcomes and the efficiency our customers need. We exited fiscal year 2025 with an acceleration in RPO and surpassed the 10 billion revenue run rate milestone, positioning ourselves for well-sustained growth ahead. We'll talk about Sam Altman's comments because he made some headlines today, so we'll talk about that in a bit. Our strong top-line results were complemented by continuing operating efficiency and strong free cash flow generation, making us a rule of 50 company. Dude, every company is trying to beat the rule of 40 at this point. Every company. For the 5th consecutive year, we are excited to carry this momentum into fiscal year 2026. We will continue to execute against our profitable growth framework. For next quarter, they expect 5.8 to 5.84 billion of security revenue. That's up 29%. RPO, they expect that to grow 23%. So basically in line with Q2. Total revenue, 2.4 to 2.47. That's up 15%. And then they expect to do about 90 cents of share on their EPS going into Q3. Palo Alto, there you go, 7%. Now you're getting a little bit more of a pump. 188.15 after the bell. Look, not bad. If you're in Palo Alto, if you've been holding it for a while, great quarter. I mean, it's not like some hyper growth quarter, but in certain, like at least not on the top line, but in certain metrics, they are growing above 30% on security ARR. They are growing 24% on RPO. Like these are numbers for a mature company that are really good to see. And if they're growing this much, you would imagine CrowdStrike puts up a decent earnings in a week. CrowdStrike right there up 1% after the bell as well. So that's not too bad. Did you see that Tom Lee posted you on your YouTube channel? Yes, I did see that Tom Lee posted me on his YouTube channel. You know, I didn't say this in the morning, but dude, I had a dream about Tom Lee. It was so weird, bro. We were in the cafeteria. It was like lunch. You were in high school or something. And we were talking about stocks, dude. It was the weirdest thing. I woke up. I was like, what just happened last night? And I think I had a dream about him because he quote tweeted our interview last night again. And he like reposted it. And I don't know, I guess I was thinking about the guy. So we were talking about stocks in the cafeteria. But yeah, they posted part 1 of this interview on their YouTube channel, which is super cool. So awesome stuff from Mr. Tom Lee. It was not a grinder dream, bro. Get out of here. Goodness gracious. It was weird though. We were literally like, it was like in my regular high school, like from when I was a senior, and we were just sitting at the lunch table talking about stocks. And I woke up and I was just like, what is going on, bro? What is happening? Like, I'm dreaming about Tom Lee like this. But yes, that was a dream I had. Jake says, I dream about you, Amit. Thank you. I appreciate it, Jake. I appreciate you having me in your dreams. Okay, so there you go. Palo Alto, that's up 6.2%. Not too bad. LiDAR, is that pumping after hours? That one is up 16%. I don't know if they had earnings, but if they did, that one's getting some momentum. That's green. If they did have earnings, but Palo Alto is the main one right here. And that one getting some love. Let's get another update on Russia, Ukraine. We got some remarks now that they are in the closed door meeting. And then we'll keep going from there.
Help them, and we're going to make it very secure.
The headline so far, Morgan, is that the president has not taken the option of U.S. troops in Ukraine off the table in discussions so far today. He has suggested that as part of those security guarantees, the Europeans will be on the front line of providing those security guarantees because they are most impacted. But he says we will be involved. That is, the United States will be involved in some way. What that actually means, whether he's envisioning boots on the ground of U.S. troops in Ukraine as part of a ceasefire agreement, that's unclear. And they said, all the leaders said that they were going to go behind closed doors and hash out, in Trump's words, who does what in this security guarantee. So more to come from here, Morgan.
And I realize this is very complex negotiations. There's a lot of different parties involved here. But given the fact they're now meeting behind closed doors, and the expectation is that's going to play out here for perhaps the next couple of hours, is there an expectation that we could get some more meat on the bone in terms of what some of that looks like, or just too soon to tell?
I mean, I think it's too soon to tell. President Trump is clearly moving on an expedited timeline. He said he's going to have a call with Vladimir Putin immediately after this set of meetings today to go over with him whatever emerges from this. So the president of the United States wants to move very quickly here, and he's been talking throughout the day about the idea of a trilateral meeting with the three world leaders all in one.
That's the part that Germany disagreed. That was like the only disagreement that I've seen so far in the meeting. Germany was like, I don't know if we could do a trilateral meeting, because Germany kind of wants Putin and Ukraine to do it themselves. But besides that, everything else for the past like 3 hours, with all the reports we've been getting from these meetings, seems to be going pretty good.
One place at one time to hash out the future of Ukraine and Russia. Not clear that everybody on the European side is on board with that. The Chancellor of Germany suggesting in the multilateral meeting that the part of which the press was allowed to see, suggesting that maybe that trilateral meeting shouldn't happen unless there's a ceasefire first. That is, that Putin has to give something to get something here. So there might be a little bit of disagreement behind closed doors, and we'll wait to see how that all shakes out.
All right.
Overall, it's been a good day from a geopolitical perspective. Now, hopefully that can materialize into an actual deal, but not the worst thing in the world in terms of making some progress right there. LiDAR is up 22%. Palo Alto is holding 6.45%. Is that a dream to buy BMNR? Is that a sign to actually buy this thing? I'm not even kidding, bro. I'm not even making it up to be funny. Like, literally, I had a dream. We were at the lunch table and we were talking about stocks. And it was so weird. And I woke up and I was just like, what is happening? But I think it's because he shared the video last night. And so he was in my subconscious. And yeah, I think that's why I thought about it. So they posted the interview on their channel right there. That's super cool of them to post the interview on the official Fundstrat YouTube channel. So for those that want to hear me say correct and right 50 times again, you can listen to it on the Fundstrat YouTube channel. Okay, so that is what we got from that perspective. It feels like a sign to buy BMNR, right? Because Steve's buying BMNR. I'm having dreams about Tom Lee. I feel like it's a sign. Here's another sign that humanoid robots are not going anywhere. Take a look at what Mr. Brett Adcock, the CEO of Figure, posted today. Big upgrade coming to Helix, which is their AI. And a familiar face is with Mr. Brett. So you got a new architecture of Blackwell being installed into the humanoid robots at Figure. Now, NVIDIA is an investor in Figure. They invested in the Series B when it was a $2 billion company. So I would not be surprised if NVIDIA follows up and says, hey, if you guys have the best chance to make humanoid robots a thing outside of Tesla, what if they make a deeper investment in them? I mean, at the end of the day, that money is going to go back to NVIDIA. They're going to be buying a lot of chips, right? So the coolest thing about NVIDIA is every company they invest in, they know that money will come back to them. You invest in OpenAI, that money's coming back. You invest in XAI, that money's coming back. You invest in CoreWeave, they are literally going to buy your GPUs to resell them. That money's coming back. So I think if they invest in Figure, especially if he's installing the latest chips, the idea that they would get another investment by NVIDIA, or at least the potential to get another investment going into the coming years as they raise their Series D, Series E, I don't think it's too crazy. But it's another sign that humanoid robots are here to stay, and Jensen obviously has a very strong incentive to make sure humanoid robots are here to stay, because that is another growth curve for those NVIDIA chips. Speaking of AI, let's talk about some of the comments from Sam Altman today and get Dan Ives' thoughts on them. Sam Altman basically came out today and he said there might be some overexcitement around AI. He didn't call it a bubble, but he did say investors are getting very excited. I think it's quite ironic for him to say that, knowing his company's worth $500 billion and they don't make any money. They're not profitable. But this is what he said, and we'll analyze some of the comments that he made today.
That's what OpenAI CEO Sam Altman is warning, saying over the weekend, investors are, quote, overexcited about the AI trade. Joining me here, Post 9, is star Wedbush analyst Dan Ives. He is as excited as his coat is bright, right? I mean, is Altman onto something or no?
Look, I mean, I believe we're only in the second inning of a 9-inning game. I mean, because it's our view on the enterprise side, it's just started to play out from use cases. I think as we go into the consumer and ultimately what's going to be autonomous and really the derivatives, I mean, Scott, it's my view the next 2-3 years, we have a tech bull market. And I think AI revolution, the actual impact over the medium and long term is actually being underestimated.
Is he doing a Greenspan here where he sort of waves the flag, but we don't see the results of the hurricane until years down the road?
Yeah, I think it comes, look, and Altman obviously being the golden child that we see when it comes to AI, I think what he's talking about, there could be some froth at stages or parts of this.
Could be.
But, well, especially when you talk about some of the valuations on some, maybe on the private side, what I see on the public side, I see ultimately demand that's 30 to 40% more than I saw 3-4 months ago. I see a CapEx, ultimately really a transformational CapEx that I view as a fourth industrial revolution.
There's no question about a transformational CapEx. Does the return on the CapEx meet the moment or not? That's what we're all going to be boiled down to. We have built in assumptions. You and every investor who's buying these stocks have done that. It has to result in something, or you get a moment like Dan Greenhouse was talking about when the bottom eventually fell out in 2000.
Yeah, and I think what Dan's talking about, and to me, the last quarter and what we're seeing out there in terms of earnings, it's actually been a validation moment for AI. And it's our view that when we look out over the next 12, 18 months, I think as you look at the second, third derivatives across software, cybersecurity, autonomous, I believe investors are actually underestimating where we believe, look, it speaks to our view where this tech market's going. And I get the skepticism, but they'll continue to prove it wrong. I think quarter after quarter.
Okay, you're adjusting the way that you want to, the way you want investors to look at all of this through your third AI 30 list, where you've updated it with additions and subtractions. You've added CrowdStrike, Roblox, GE Vernova, and Nebius Group. You've taken off C3 AI, Cyber, following Palo Alto's deal, Adobe, and Elastic. Yep. So, I mean, I think people can look at Adobe and figure out why you've...
So I didn't see what he removed. He removed CyberArk, though they're getting acquired. That doesn't matter. C3, that was obvious. They should have never been on the list. Adobe, that's the big one. That is, a lot of people are concerned about traditional SaaS businesses. Looks like he's getting rid of that. And then Elastic, good SaaS company, maybe not the best AI company, but it seems like those are the ones he's removing. And he's adding CrowdStrike, Roblox, GE Vernova, and Nebius.
Removed it. Some would question why it was even on there in the first place if it was an AI 30 list, when they apparently, according to the investment community and the markets, clearly are being left out of that conversation. But Why crowd in terms of AI? GE Vernova is, I think, well known by everybody as to the power portion of this, and Roblox.
Yeah. So crowd, first, when it comes to cybersecurity, I actually think first Palo Alto, which obviously we were reporting later, Zscaler, and I think CrowdStrike, you're going to see AI play more and more role in cybersecurity. That's actually to us one of the biggest beneficiaries when it comes to second, third derivatives. I think CrowdStrike is not being factored in enough. You talk about some of the infrastructure plays, Nebius, being a core one. And to us, look, when it comes to Roblox, I mean, it's our overview of gaming, what's happening on the consumer side. I mean, you are seeing AI transformation that's happening across the industry. And to us, the whole goal of the AI 30 is to capture based on whether it's software, chips, consumer, autonomous. And what I believe, this is a golden age for AI. It's not just about 3-4 names.
All right. Good to see you. Thanks for being
Great,
here,
thank you.
Dan Ives.
All right, there you go. I don't know why Sam Altman said what he said today. It was very weird, his comments about like AI being overhyped. Now, the exact quote, let me just give it to you right here. And I think he's kind of signaling maybe valuation concerns, especially in the private markets. Are we in a phase where investors as a whole are overexcited about AI? My opinion is yes. Is AI the most important thing to happen in a very long time? My opinion is also yes. That is the exact quote that he said today. So I don't know how to read into that. Is AI the most important thing to happen in a very long time? Him saying yes means, okay, he's excited about it, but he's also saying investors, not people, investors as a whole are overexcited about AI, aka there might be some overvaluation. My opinion is yes. Now, granted, the ironic part here is like, wait a second, if we're overexcited about AI, then your company shouldn't be worth $300-400 billion. Like, get that sucker down to $100 billion. Why are we giving it this crazy of a premium? Is that overexcited? Or is he trying to kind of signal, hey, we're the guys you should be excited about, but you shouldn't be excited about Anthropic. You shouldn't be excited about Grok. You shouldn't be excited about all these other players that realistically don't have a chance to compete with us. I think that's the undertone of the phrase or of the like sentiment that he was going for. Because if that's the case, I think then he would have to admit his company's overvalued. And I'm sure he doesn't want to admit that, or I would imagine to raise the money. I mean, this guy's trying to raise trillions of dollars. You would need an excessive market cap to justify an investor giving you that much money so they can eventually get a return. But I think he's hinting a lot of the other companies might be a bit overhyped. And time will tell in regards to seeing what happens with some of these AI names. Robinhood right here, 115 after the bell. Palantir 174. Tessie 335. Nvidia 180, 191. Grab relatively flat on the day, 511. Google 203. We'll talk about Google in a second. And then SoFi, nice $24 close on the day, which is nice to see for SoFi. Yeah, $500 billion valuation. That is the that is the most expensive private startup. The only one that was more expensive is SpaceX. And, OpenAI is growing faster than SpaceX, but still, it's pretty aggressive to be at a $500 billion market cap. And that means the IPO is going to have to be at $1 trillion. Like they're not going to IPO at 600 billion. Like this is going to be this probably will be the world's first $1 trillion IPO. The question is just going to be, will they have the growth to live up to that once they get to that stage? Let's get the coverage right here on Palo Alto earnings as well.
Time. Christina Parts-Nevelis has the numbers for us. Hi, Christina.
Hi. Well, shares are up about 5-6%, driven by the higher guide. But I want to break down the numbers for now 7%. Let's break down the numbers for the quarter. Earnings per share of 95 cents, which is a solid beat versus estimates, with revenues just slightly ahead of what the street wanted. But it's the Q1 guide for EPS, earnings per share of 88 cents to 90 cents. That's a range, is higher than what the street wanted, as is the Q1 revenue guide. One key metric for a lot of cybersecurity software names is the remaining purchase obligation, RPO, and it really gives us a glimpse into the revenue backlog, who's going to spend money in the near term, and the company is guiding between $15.4 and $15.5 billion, which is above consensus. Overall, the report is seen as a positive. There's a lot of long-only funds in this name, especially when you compare it to competitors Checkpoint and Fortinet, which really plunged after their, less impressive guides. Morgan.
All right. Shares up 6.5%. Christina Parts-Nevelis, thank you.
You had a good raise. You had a good beat and raise on Palo Alto. So if you're in that one, I think we're still holding 7%. Not doing too bad. Yeah, 5%. All right. At least it is not down like it was over the past couple months. So I think that sets up a good earnings going into CrowdStrike's earnings, which I think is the same day as NVIDIA, if I'm not wrong. So August 27th, that will be an important day. The S&P 500 ended the day down 0.02%. You did not get a lot of moves to the upside or the downside. Again, I think everyone is a bit more nervous about what's going to happen with Powell. The probabilities now in a rate cut are 83.2% for September. Those were 82% in the morning, so that's up a little bit. It's down from 90% on Friday. After CPI, it starts to come down a bit more. But Powell is going to be the next big thing that everyone pays attention to going into Friday. All right, let's talk about Google. So Chris Camillo came out today and he said he is short Google. Now, I'm not going to read the whole thesis. We read it in the morning, but essentially his argument is that there are inflated search queries that are being indexed from AI bots. So it's almost like if you ask Grok a question and Grok searches Google and finds like 34 results, and then it synthesizes the answer into like an AI answer, but then it gives you the sources, aka those 33 different links that it looked through in order to get you the answer. Chris Camillo's argument is that those 33 links or 33 searches done via Grok are Google queries, which technically they are, but his argument is they're not real Google searches. They're like AI bot index searches. And as a result, essentially the implication of what he's saying is that the Google Trends traffic is off. He said an AI app developer I spoke with explained that a single AI research request can spawn hundreds of Google queries and clicks. This dynamic could inflate query growth even if human searches are slowing. And essentially advertisers, the sort of extent of his argument is advertisers in the future are going to recognize that they're not getting the bang for their buck like they would get on a Meta, for example. And they're going to want more transparency behind how Google is actually reporting their search query growth. Now, he commented under my post, it's a small short position, so don't read too much into it. The point of this thread is to push Google to clarify how AI originating traffic is classified for advertisers to restore data integrity to Google Trends for consumer research. So he does think long-term Google's fine. It's kind of like a short time. It's a short-term short position. I don't know if it's puts. I don't know if it's actually shorting. I don't know what it is. But Camillo tends to do that, right? He tends to take like 3-week short positions, 3-week long positions. He's very short-term in nature when it comes to his options. And so long-term, he did say he's bullish on Google, but short-term, he's thinking this is a reason that the overall advertising revenue is not going to grow as much, or the quality of the advertising revenue is not going to be as good. And eventually people will recognize that that's an issue. Now, look, I think there's some merit to what he's saying in regards to the actual reported search query growth. I just think, and I think he would agree with this, it's not going to matter right now. Like as long as revenue is growing, as long as net income is growing, Google is the most profitable company in the world at 111 billion trailing 12 months net income. And as long as the actual search queries are growing, even if they're getting indexed from these AI bots, that's what the street cares about. So you have free cash flow, net income, revenue, and search revenue, which was up 12.7% year over year, where the street thought it would barely come in at like 10%. That's enough for this thing to get a multiple. And again, this thing is still being disrespected on its multiples, trading at 17 times, I think 2027 earnings or 18 times. So it's still one of the most cheapest stocks in the market. Steve and I, last night, we were looking at some of the multiples on these stocks. NVIDIA would have to trade at $700 a share today to be worth the forward multiple of Tesla in 2028. Which is, it goes to show you how aggressive Tesla's multiple is. But again, Tesla's getting its multiple because people expect it to one day grow into it. But Google's not getting that multiple. And so I don't think the short like makes a ton of sense right here, because Google's already not like egregiously expensive by any sense of the imagination, unless you just feel like the business itself is deteriorating. And then it's like a long-term short because you think eventually people will wake up to it. But if the business itself is performing and they're subsidizing the amount of time that the business will eventually take to figure out the other parts of their business that maybe not performing as well as they were in the past, to be able to build out like what does AI overviews look like from a monetization perspective, then I think Google has enough time to figure that out. And then you got YouTube and cloud and Waymo. I mean, there's just so many other things that add to the Google thesis, which make it hard, in my opinion, to like meaningfully say it deserves to be back in the 100s or something like that. So that's what we have on Google. When Gemini 3 comes out, half of the people are going to panic buy Google at 240. Gemini 2.5, from an enterprise perspective, is being seen as one of the gold standards. So I agree. I mean, like, as they keep updating it and they can integrate the AI workloads from Gemini 2.5 into the cloud offerings that they're providing. Remember, Google also bought Wiz. You know, we were talking about Palo Alto. Wiz was a $32 billion acquisition they did in regards to cybersecurity. And so the overall extent of what they can offer on the cloud, I don't think is the worst thing in the world. I think it's actually very compelling, and it should continue to lead to top line revenue growth of at least 14 to 17% over the next couple of years. And if they're growing that much at this size, I don't think the street's going to be that upset at them. ARM has hired Amazon's AI chip director, Rami Sino, to help build an in-house chip. ARM, the semiconductor company, is hiring someone from Amazon, the cloud company, to build chips. Interesting. This guy was already at ARM, by the way. This guy, I'm on his LinkedIn right now. This guy worked at ARM about 7 years ago, from 2014 to 2019. Then he went to Amazon to be the director of engineering at AWS, and now he's going back to ARM. Huh. That's going to be interesting to see. I didn't know Amazon makes AI chips. Yes, Amazon has been working on their, what is it called? Trainium chips or something? I think that's what it's called. I mean, like, it's eventually supposed to get them off of NVIDIA. It's a long time away. NVIDIA tanked, I think, back in February when Bloomberg did like a headline piece on Amazon competing with NVIDIA. Realistically, Amazon is still buying a ton of chips because, like, they just have to. But eventually the goal is for them to try to get off of those chips. Same thing with the other hyperscalers, just in the meantime. They cannot easily get out of buying these chips, at least for now. Okay, so that's what we have with ARM and Amazon. Where is ARM after the bell? ARM right here, 140. This one did tank after earnings last week. And then Amazon. Amazon, 207 to 230. Earnings 235, drops to 207 on some random thing Jassy said about tariffs. Right back to 230. I mean, again, resiliency is the name of this market. It is so damn incredible to see how resilient the market has been. And maybe Powell makes it less resilient if he says something the market doesn't like. But people have put their hat in the ring and said, we are willing to buy this dip. Palo Alto, by the way, still up 4.5% after hours, not at 189 anymore, 184. The call will be at 5 o'clock. But that one still up 5%. Amit, are you getting the real gold Robinhood Gold Card? Okay, so in the Robinhood credit card app, if you have 850,000 points, you can upgrade from a regular gold card to a real Robinhood Gold Card. I don't have 850,000 points. I think the lifetime points I have is like 89,000. So it would take a long time to get to 850,000. So I'm probably not going to be upgrading to a solid gold card. But it is cool that they're doing that. You just have to have a lot of points to be able to let you do that. Okay, let's talk about MSTR. Yeah, because this headline right here is very important. And Chanos, who's shorting MSTR, he came out with something today that I think is important to look at. This is why, by the way, we talked about this on Friday. I think we were all right. This is why I think the stock has been lagging Bitcoin. So originally, okay, MSTR on that earnings where everyone thought it was going to go to like $10,000 a share because they had a 14,000% increase in their net income because of their FASB rules when it came to Bitcoin. MicroStrategy put out this statement right here. If they are below a 2.5x MNAV, Strategy will not issue MSTR except to pay interest on debt obligations or to fund preferred equity dividends. So MSTR, Saylor came out and said, hey, we're just not going to dilute if we're below a 2.5x NAV. Today, they updated it. Below a 2.5x MNAV, Strategy will tactically issue MicroStrategy to pay interest on debt obligations, same thing, fund preferred equity dividends, same thing, and number 3, when otherwise deemed advantageous to the company. Michael Saylor did buy another 430 Bitcoin today. So the original earnings was useless for them to come out and say, hey, this is our guidance on when we're going to dilute you. Because less than 3 weeks later, they come out and say, actually, you know, we're probably going to dilute you when we want. And so we just have to legally warn you that we're going to dilute you now. But just know if we're below a certain MNAV, we're going to dilute. And this is the issue with MicroStrategy, I think, over the past couple of weeks. Now, long term, I think they'll be fine. If you believe in Bitcoin, they should be totally fine because they own like 1% of all Bitcoin. But the problem is in the short term, and this is what Adam has been talking about many times when he came on the channel, Saylor is addicted to using MSTR stock as his, I guess, pipeline to buying more Bitcoin. And he knows that people are going to keep buying it, even if the stock goes down, because he has that type of a cult, and the options market is still so juicy with the dilution. And so he knows that he can easily do these preferred equities. He can easily give out these dividends. He can easily collateralize his stock to get more debt. He can easily issue more shares, and there will always be a market for his stock. And he's unapologetic about this. We watched a video about him a month ago, basically telling someone at a conference to shut the hell up and stop complaining about him diluting, because his mission is to acquire as much Bitcoin as possible. So he kind of doesn't care. Now, will Tom Lee be the same? I don't know. But the fact that they have 24 billion that they can use to dilute at any point, you would imagine that that mentality is going to exist as well. Obviously, if Ethereum can do what Bitcoin has done over the past 2 years, then that will lead to a increase in BMNR price, even with the dilution. But Ethereum hasn't made that move yet. And until it makes that move, I think we're going to have to see how much Ethereum they're actually able to acquire on the balance sheet. NVIDIA right here, 181.93, Palantir 173.97, and then Tesla 335.23 after hours. Why is nobody buying the Palantir dip? I do not think this is a Palantir dip. I think 187 to 170 is not really a dip, especially given it's trading at these multiples. At 174, the market cap is still 412 billion. So I think if you're a Palantir shareholder and you can't stomach 187 to 170, you probably shouldn't be a Palantir shareholder. Like, that's not a dip at all. It's not even kind of a dip. And you got to be ready for it. If this thing goes down to 150, 160, like, it is what it is. We all know it's trading at premium multiples. Can it keep its premium? Sure. And I think the earnings growth will allow them to keep their premium. But if it doesn't, it's also not like you can be mad at Palantir, like, they're already trading at a very aggressive multiple. So I don't know. I don't think it goes down to the 40s and 50s. Like, I think it can chill out from, like, as Steve said, 150 to 200. I think that's the range towards the end of the year. And I don't think that's crazy unless Q3 really, gets like 60% growth or something like that. But I think every shareholder should be pretty happy with that, because that's still maintaining a $350 billion to $430 billion market cap, which is obviously not too bad on Palantir. All right, so that's what we got after hours on Palantir and NVIDIA. Again, Palo Alto still holding 5%. They beat on the top and the bottom, which is not too bad. That stock up about 5%, holding its momentum. S&P 500 is flat after hours. Does anyone know what Tesla, or why Tesla's up? I don't have a reason for why Tesla pumped today. I mean, 1.39% is not really a pump, but I don't think I saw any particular headlines. We know 2 weeks ago, or I think it was last Monday, they came out with that news that Tesla's trying to get into the UK and tap their energy business. So that was one of the catalysts that we had. But outside of that, I feel like today was more so technicals than anything meaningful. Let's check the options market today in terms of what we had for the top 20 stocks. Wow, dude, that's wild. Usually NVIDIA and Tesla are number 1 and 2. Okay, before I show it, I want you guys to guess. What do you think was the second most traded option, or the second most traded stock in the options market today? I'll give everybody 30 seconds. Let's see if anyone can guess it. You should be able to guess it. It's not that hard, but it's also surprising because I didn't think it would be number 2. NVIDIA's number 1, Tesla's number 3. It's not UNH, it's not Palantir, it's not Wolf. I see one person got it. Okay, now like 5 of you guys got it. All right. It is Opendoor, dude. Freaking Opendoor. 1.3 million contracts. Let me tell you something. The Opendoor momentum is really good for Robinhood. Because how much you want to bet a lot of these people that are buying these contracts and buying these shares of Opendoor are doing it on Robinhood. I mean, I would not be surprised to see a lot of this momentum coming from Hood. And so I know it's all around the world. I know it's become this worldwide movement around Opendoor, but I do think a ton of it's happening on Hood, which is just so juicy for Hood's trading volumes if they have a stock that's getting that much momentum. So you have NVIDIA, Opendoor, Tesla, Intel's number 4, Palantir's number 5, Ibit's number 6. Then you have Apple, UNH, AMD, Meta, Wolf. They got a deal this morning. CoreWeave, MicroStrategy, Amazon, Microsoft, Hood, Google, Palo Alto, SoFi, and then the Ethereum BlackRock ETF. So that's what you have in terms of the top 20 on the options market. It's kind of wild, right? Opendoor being number 2 as the core name, like that's kind of crazy, dude. Like that's usually Tesla and Nvidia are number 1 and 2 almost every single day. Opendoor being number 2 is just like, wow. What was volume? I think it was like 400 million shares. It was 405 million freaking shares, dude. My goodness. My goodness. This is the website I look at for those that are interested in it. This is the website right there in the chat. You can click that. And that's where you can get a ton of this data. It's got to pass $4 to really get a move. Yeah, I agree. It's got to pass $4. Oh, did Eric Jackson and Andrew Pomp have their, or Anthony Pompliano have their interview yet? Because I know they were supposed to have it today. Oh, yeah, they did. They did. All right, let's hear a little bit of it. Let's see what this guy has to say, as this one has pumped about 15% today.
She, the company still exists, so there's that going for them. I think she launched some asset light programs, which I am totally in favor of recently. Namely like Cash Plus, and that tried to show how Opendoor can build an asset light marketplace model, kind of like an Amazon 3P model instead of just the 1P approach that we traditionally think about with Amazon. So those are good, but where they need to go is embracing AI, being AI first, thinking about how do we change this company into being the Amazon or the Google of real estate. That needs a tech person, a product person.
Okay, so here's my question. Can Opendoor, put in the chat what you think, can they actually become the Amazon of real estate or the Google of real estate? Because these guys, I think, are throwing around a lot of buzzwords about embrace AI. Like, what does that mean? They buy and sell houses. What does that, like, of course you can use AI to maybe help you become more efficient, but what does that mean for these guys to say they've got to embrace AI? They've got to embrace the technology aspect of it. Like, one of the things that made Opendoor special in 2021 was that they were a tech company first before they were a real estate company. That was the whole thesis behind it. It just didn't end up working out. But that's the part I'm confused about with the argument around how AI needs to be the tailwind for Opendoor. I don't know exactly how that's going to increase their gross margins or their profitability in the housing market.
It wasn't Carrie. So, rip the Band-Aid off, get her out of there. I'm happy she stepped down, and let's move ahead and find the right person.
So what I think I'm hearing from you, and a friend of mine, Mike Gonzalez, I think made a pretty good point. It's like, look, this company was basically bleeding out. There's people who thought it was going to go bankrupt. It wasn't going to exist. Carrie kind of stepped into the fire, into the breach as you described it, and she steadied the ship. She at least stopped the bleeding, which I think that everyone should give her credit for, and she did a good job there. Now, I think your point is, okay, now the next phase of this business is somebody who needs to be more product-centric, somebody who can go and embrace this stuff. You mentioned AI. What are the areas where you think using AI could have a profound impact on the business? I saw a tweet that you had where you said, you think that they could actually get rid of a very large portion of the employees and leverage AI to this more kind of capital light model. Talk through a little bit of the specifics as to kind of how you see this potentially happening.
Well, sure. They have 1,400 employees right now, according to Bloomberg, working at this company. I don't know what they're all doing, to be honest. I mean, honestly, and just seeing how slow they were to react to retail, and how, obviously they had a lawyer and compliance person and this person and, a comms person, there's too much fat there at this company. You don't need 1,400 people to do this business. So it gets a little sensitive, obviously, when you're talking about AI, because AI is threatening for all kinds of jobs across all kinds of industries, and nobody likes to lose their jobs. But there's no question that this company could be more efficient and drastically reduce its G&A through fully embracing AI. They could do all the inspections of houses with AI. They could do.
I feel like this guy's bullshitting. I feel like he's bullshitting so hard. They could do the inspections with AI. What? What does that mean? AI doing an inspection? What are you talking about? You don't think they're already using technology to find certain deals? And how much more will that increase their gross margin? This is a company that makes 6% on every dollar. That's not their net income margin. That is their gross margin. They don't make any profit. They don't have a net income margin. So to me, when that's your proposal, outside of, I agree, you could reduce the employees with AI, sure. But that's a one-time cost reduction. That is not fundamentally changing the business. I don't know, dude. I don't know if there's a real thesis here about embracing AI. I'd rather have them buy Bitcoin. I feel like that's a better thing for the stock, but I don't know if they really have a plan when it comes to AI.
Plan out renos. They could plan, they can kind of map the whole process, using an AI first approach.
Map the whole process using an AI first approach. Like, this is like a third grader. It's like, did you read the book? Did you read the book? It's like, yeah. And then they just read you the title of the book as the explanation for reading the book. Like, come on, bro. That's not something serious. This guy's not being serious right here.
But I think that maybe the biggest thing, which is sort of, at the heart of this is that they are thought today to be this buying company. We need to borrow a lot of money from, lenders, put a lot of debt on our balance sheet, go out and make firm offers, cash offers to people to buy their houses. And then we get stuck with the bill like we did in 2021, where we bought all these houses at inflated prices, the housing market goes south, and we're stuck. And that's like high risk. And that's basically kind of been that black cloud hanging over this company. I think they can totally switch to a purely asset light model. Kind of think of like Airbnb. All it does is sort of like sits up here at the top level, sort of takes in anybody's demands to rent someplace somewhere in the world, but they never actually own the places. And
how can someone tell me? I'm genuinely not even trying to like hate on the guy. I am actually confused. The reason the business model sucks, the reason why Zillow left the business model at the end of 2021 is because it's really hard to make a profit when you're buying houses in bulk and then selling them, especially if the interest rates aren't cooperating with you. How do they become the Uber, the Airbnb, the tech company, like the actual tech company that has 90% margins by sitting on top of the property and collecting some type of a fee? Or like, how do they do that? Are they just going to become a referral website for agents? Well, guess what? That's called Zillow. Zillow is the marketplace for advertising for real estate agents, and it's a very good business. And they tried to do the iBuying stuff. They left because they realized the business sucked. Opendoor stock is down 99% because they tried to embrace it. They haven't been able to win. So what exactly is he talking about in terms of a pivot to become asset light? Because if you're buying houses and selling them, you have to own those houses at the end of the day.
Run them. They are just the interface.
It's a marketplace.
Transaction happening.
Yeah, it's a marketplace.
Right. Yeah, there is no marketplace in real estate. This is a $20 trillion market in the United States, residential real estate market.
Do these guys not know about Zillow? Is that not a marketplace for buying and selling homes? Like, am I tripping, or do I not understand Zillow's business? You list a home, just like on Amazon, you list a product, someone goes there, someone pays for you to see the product. If you click on it, the advertiser gets an ROI if you buy the product, and then the advertiser pays a fee to Zillow, and Zillow takes a commission. Like, I think there is a marketplace. I think these guys are talking out of their ass right here. And I don't know exactly what they mean to say in regards to, and the reason it's important to analyze this is because if this is going to become a phenomena in the market and get a lot of hype and momentum, we need to understand, is that hype and momentum built on anything real? And this is the spokesperson for this hype and momentum, this guy you're looking at right here. Or is this all just nonsense that is trying to pump the stock?
Market alone, $20 trillion, 14 trillion of that 20 is tied to a mortgage. And what's key about Opendoor versus a Rocket is the sellers come to Opendoor. This is all about seller intent. If I'm a seller, I want to know how much can I get for my house today. What's the baseline? What's the cash offer that I know I can get in my bank in 45 days? And you can get that with Opendoor. You cannot get that with Rocket. You are not going to Rocket for a plain vanilla mortgage if you are selling your house. And seller intent drives all of the downstream revenue for Opendoor in this real estate market, just the way it did with sort of search intent for Google and that market.
So talk me through this, right? I'm a seller of a home. I come to Opendoor, and in the vision that you have from a product experience in this capital light model, I come and I say, okay, here's my house, here's the address. Opendoor then says to me, your house is worth, $800,000 or $1.5 million, whatever the number is. What changes about the model if I hit the bid? If I say, okay, $800,000, I like that, give it to me. What would be different about the Opendoor in this capital light model compared to what they're doing now?
What Opendoor can do is, if anybody is like a Wall Street type, think of like a caller trade in Wall Street language. Like, it's sort of like the Opendoor sort of gives you the baseline, right? And then it says, makes you a promise, the seller, we will deliver on this 375K for your home in 45 days, let's say. Okay. And you might think, well, it's worth 400. And Opendoor knows it's worth 400. And Opendoor knows that in those 45 days, and especially at the beginning of the next few days, it can go to its network of agents, partners, and probably do better than that baseline offer of 375K. And it will come back to you in all likelihood with something like a 425K offer, maybe through an agent that it partners with, maybe through some other buyer, institutional type buyer. And when it delivers that, Opendoor is that middleman that does and will get paid, will get some portion of that incremental value that it created, that it's delivering to the agent partner through finding that transaction. And the seller knows that that's likelihood, but in the back of their mind, there's an assurance that I know if nothing else, 45 days from now, I got 375K coming into the bank. They're not getting that experience from Zillow. They go to Zillow, they can do a Zestimate, they can find information, and then, Zillow's going to pass me off to an agent to what? Do I get a firm offer from that agent? No, I'm not getting anything like that from a Rocket. If I'm a buyer and I want a mortgage, I want to know what I qualify for. Yeah, then I'm going to Rocket or something. So Opendoor is in this unique position where
dude, I think he's describing Zillow. He's trying to downplay like you can't do this on Zillow. You can do this on Zillow. And he said, they're going to send me off to an agent. Well, he just said that Opendoor is going to be working with agents to get you that 425, just like Zillow would. So unless Opendoor can give you something where like, hey, in 2 days, we'll get you an offer, or we're going to get you an offer 25% more than what your house is currently worth. Like, unless they can have some very unique differentiating factor, selling a home is a hard process. Like, it's always been a hard process. Now, technology has made it simpler than before, but it's not like the value proposition, at least from what I'm understanding, is that Opendoor is going to streamline it to such a degree that you'd rather go to Opendoor over Zillow. And even if you do go to Opendoor over Zillow, where do they make their margin outside of actually buying the property? That's what I'm the most confused about. And that's why it just doesn't sound like there's some really unique business model that he's proposing that the company can embrace.
You can capitalize, just by having that kind of trust of the sellers.
Now, if, let's say, in that model, you offer 375, you think it's actually worth 400, 425, they go out to their network and they do not get an offer. In that case, would Opendoor then say, hey, we step up to the plate, we buy for 375, and now we take the asset onto our balance sheet?
No, they do that now. And that's why the thing was like 51 cents back on June 25th, because the Wall Street and the investors just thought that was like too risky a model for them to kind of take all that capital risk onto their balance sheet themselves. So they would still make that firm offer. Nothing would change in an asset light approach, but instead of them being the ones to follow through and carry through and do the buying of that house, they would have partners behind them that would be ready to step up the plate. And there's a ton.
Wait, but hold on there. If you have partners coming in, why are they taking the risk of the house on their balance sheet? If his goal is for Opendoor to not have the risk on their balance sheet and have partners come in so that if the deal doesn't go through, there can be a guarantee of some offer from partners that eventually will buy it versus Opendoor, which I agree with. It would be good for Opendoor to not have a lot of assets on the balance sheet that are essentially not moving and they're dead money. What are they giving up? Well, they're probably giving up some margin because they're going to have to cut a deal with some of these partners, which again goes back to my question of how do you get that 6% gross margin to get anywhere near 20, 30% gross margin. I mean, most software companies, tech companies are at 50 to 80%. How does that happen? Even with partners that then buy the house if Opendoor is not the one buying it?
Of institutional buyers out there, with looking to deploy capital, and the promise to them is that, I can buy this $400,000 house for $375,000. I'm there all day, Opendoor. I'm your partner for life.
Yeah, but that also depends on the seller willing to give up the house with a $25,000 discount. Like what? Just because if you're a desperate seller and you need the money, that's what they're building the business model off. But if you go to Opendoor and say, hey, I want 400, and they say, we'll guarantee you 375, and then you say, okay, go through the process, and then I'll make the decision at the end. And Opendoor comes back and says, dude, we weren't able to find 400, 420, we'll give you 375. What if you just take that house and go to Zillow? And maybe you get 395 or something. Like if the entire business model is based on people that are just willing to sell immediately, I don't think there's that many people that would be A, willing to do that, or B, there would be margin in that type of business. Also, what institutional investors are going to just step up and buy all these houses? Like that's a big claim that he's making right there. And I don't see that easily playing out the way he says it will.
Sign me up. I'm there to back you up. So again, but from the seller's perspective, all they care about is that speed and that certainty on price, that they know that that's the minimum they're getting. They know that in all likelihood, and after several transactions with Opendoor, they know they're probably going to do better than that. But the peace of mind, especially in some parts of the country where, you sign up to sell your house and maybe this thing's going to take 6 months, 8 months, 12 months. I mean, you just don't know. It's like so that speed and assurance is very important to a large.
Maybe, but my dad's been trying to sell his investment property for the past 6 months. I think I told you guys a couple months ago, we put it up for sale. We have not got a good offer. My dad's not selling. My dad's going back to renting it out. And I don't think my dad is some person who's like super greedy or cheap or anything. My dad wants a good deal and he's willing to negotiate. But if you're going to do 200,000 down from the listing price, there's no negotiation. So the idea that people don't want a good deal, my dad would rather wait 2 years to sell that house versus giving it up for way less than what it's worth on the market. I don't know if he's correct about that behavioral assumption around buyers and sellers in the housing market.
Part of the market. And so I think the goal for Opendoor should be like 10 years from now, like this is such a massive market, $20 trillion. Can we get to 10%? Like, I don't know what they're like 0.5% right now nationally. Like Tesla's goal was always 10%. They're there after like whatever it is, 15 years. There's no reason, who's going to be the platform that it gets that 10% level? That's going to be a massive opportunity.
So it sounds like value creation comes from being able to operate with speed, operate with certainty to the seller. And then there is some transformation in terms of the financial structure of Opendoor. Rather than taking this onto their balance sheet, they have partners. They're really now in the broker or kind of the platform marketplace model rather than actually taking this stuff on. I've seen you also talk about assumable mortgages. And I know the guys over at Rome. I've spent a good amount of time talking with them. Keith Raboy, who is one of the Opendoor co-founders, is an investor in Rome. There's a bunch of people who are paying attention to this. And I personally think the assumable mortgage space is very interesting, given that we have high interest rates at the moment. So talk through kind of how you think assumable mortgages could potentially play into this whole story.
Well, I think you and I are kind of in simpatico in the sense that like we both want to see rates come down. We think like there's like a little risk of inflation, but I mean, we have to acknowledge that is a risk of like if we dropped the interest rates to zero again, ZERP, it would be a matter of time before we're facing the same kinds of challenges of higher interest rates. The wonderful thing about assumable mortgages is assumable mortgages basically allow you, if you locked into a 3% mortgage rate in 2021 or 22 or something like that, and you've got it on a 30-year fix, you don't want to move from New Jersey to take that job in Texas because you might have to walk away from that 3% and you get locked into a 7% mortgage. You don't want that, so you stay put. Assumable mortgage allows you to basically port that mortgage with you. You take it with you. You take that 3% with you to Texas, and you buy that house there. Today, assumable mortgages are only allowed on about 20% of mortgages nationally, mostly VA related mortgages. So the idea would be to go to the Trump administration. Bill Pulte would be the person to do this and say, hey, want to make this 100% of all mortgages are able to do this. What's the downside here? There's the nice thing about you do this, there are no inflationary effects. People have these mortgages already. We're just asking them to keep those mortgages and be able to go and buy another house. What that does, though, is it drives down the cost of home ownership nationally. And there's nothing that's probably more important other than like when, it goes part and parcel with the cost of living, right? It's like the cost of your home. There's no bigger cost for most Americans than the cost of their home. And so if you can drive down home affordability, because now people can port their mortgages with them, there are more buyers and sellers for your home. There's more transactions that are going to happen as opposed to this frozen market that we've had for these last couple of years. And all the downstream revenue, all the people that get jobs from home renos and and all this kind of stuff, the agents themselves that are tied to like a better booming housing market with no inflationary effects. I mean, that's a gift,
We're buying it, folks. Does it make sense? An assumable mortgage is a financing arrangement where a home buyer takes over the seller's existing mortgage, inheriting the original loan's balance, interest rate, and repayment terms. Obviously, if Pulte can make this more widespread, Eric Jackson is saying that would get the cost of home ownership down. It would bring up the question, why would sellers want to sell if they have a home that has a good price on it, right? Has a good mortgage on it. And so that assumable mortgage, being able to transfer that balance, that would require sellers to opt into that system. And that usually happens if prices are good. And right now, prices are frozen due to interest rates. Now, obviously, interest rates changing could change that dynamic. But even if you assume the best case of the assumable mortgage argument, which I don't know, maybe it is true, maybe it is not. The core thing that I'm focused on is the pitch on AI, because all I've seen from the tweets on the Opendoor community is they need to embrace AI, they need to embrace technology, they need to embrace the future. I don't know, dude. Yeah, the seller would lose all their equity. There's a lot of concerns with what he just said right there. But at its core, I don't understand why he's not describing Zillow. I'm going to do a poll right here in the chat on what we think. I'm a realtor. This guy's full of shit. Well, I'm not a realtor. I don't know as much about real estate as some of you, but like at its core, I kind of understand Zillow. I'm not deep into Zillow, but I kind of understand. Like it's a marketplace for selling homes, and there's advertising revenue and commissions that are made on it. That's an asset-light business. I feel like that's what he's describing. Do you think Eric Jackson's thesis makes sense? The biggest red flag for me, and again, I still think the stock can do well. If they get like a Keith Raboy or someone as the CEO, I think this could pump to $5 easily because people will just be happy to buy it and embrace the new leadership regardless of the price. Like this has nothing to do with the stock. I quite frankly don't care about the stock. I care about the actual underlying argument behind the new business model. By the way, the White House just tweeted this between Trump and Putin. Not Trump and Putin, Trump and Zelenskyy, I'm sorry. I just pulled a Biden right there. I just pulled a Biden so hard. I think it looks like the talks were productive. It looks like the talks were productive. I mean, tweeting out these types of pictures, it looks like the talks were not too bad. But I think that the core of the business is like not making sense to me. It sounds like Zillow. That's what it sounds like. And if you're going to compete with Zillow, then okay, but it's not easy to just go into that market when you're in iBuying. Rango says, Meet Kevin is going to eat this guy up. I'm deep into this market. Meet Kevin is going to destroy Open with their model. You need to do to actually understand real estate to run this company. I don't know that much about House Hack, but I mean, I will say Meet Kevin's been in real estate for a long time, and Meet Kevin specifically has not liked Opendoor's model for the past couple of years, ever since he launched his startup. I mean, again, I don't know how Meet Kevin's startup is going to work, but in terms of Opendoor, I think there are some legitimate concerns to have. And if you take away the iBuying part of the business, what is left? Like Eric's like, hey, we need to be an asset-light business. Okay, well, the reason Zillow left iBuying is because they were not asset-light. And no matter how many institutional partners you have to be able to make it asset-light, it's not that easy to just become the operating system, quote unquote, on top of the marketplace. That is why Uber gets a multiple, Google gets a multiple, DoorDash gets a multiple, because these guys, all they have to do is code. You build the app once, you get the supply, you get the demand. It's really hard to build a network effect, but once you have a network effect, that network can infinitely scale, because that's the beauty of network effects. And then you have a business that can have reoccurring revenues for a very long time, but super attractive gross margins, because you don't have any core costs of the business outside of labor and code, maybe some office buildings. If that's what he's trying to do with Opendoor, then you have to completely get rid of the iBuying model, or have a guarantee that Opendoor doesn't have to have the houses on their balance sheet, which I don't know how easily you can make that happen. So this is confusing, dude. It's very, very, very confusing. Again, remember, the reason I'm also speaking about this is because it's so funny that Opendoor has become a stock that's run. I wanted to buy this in December. I told you guys, me, Steve, and Chris, we did a full 2-hour session looking into Opendoor, and the biggest issue we had was the gross margins. And we looked at 2021. These guys did like $30 billion in revenue and were not profitable, because you can't make a profit on this. And if you can even inch out a little bit of a profit, that's not an attractive business to invest in. Unless, as Eric Jackson says, they become a tech-first company and they become the operating layer on top of everything. They don't have any assets. But then I hear his pitch, and his pitch is you can use AI to do better house inspections. Like, what are we talking about here? What exactly are we talking about here? 83% of you say no, the thesis does not make sense. Honestly, I'd rather them buy Bitcoin. I'd rather them. I mean, dude, they got $1 billion in cash. Buy some Bitcoin, dude. I think that'll do more for the stock than embracing AI, whatever that means. So I don't think it's crazy for them to buy. I think, by the way, why is Pomp investing in Opendoor? I think Pomp is investing in Opendoor because he wants them to buy Bitcoin. And it makes sense because Pomp is a Bitcoin maximalist. He just launched some SPAC that's deep in Bitcoin. I think he sees this as an avenue to gain enough influence with the management team to get them to buy Bitcoin, maybe through his SPAC. And so that because I have no idea why Pomp doesn't know about real estate. He doesn't care about real estate. Pomp's a crypto bro. Why is he hopping in Opendoor? Like that to me was another red flag. I'm like, dude, I like Pomp. He's a cool guy. But why are you throwing your hat in the ring into Opendoor? Like, why? Just to be cool? Hop on with the trend? If so, be honest about it. But he's talking about, I believe in the potential. The potential of what? Like, what are you talking about? You don't even know the space. Tokenized real estate is going to do far more for the market than iBuying, 1,000%. Tokenized real estate, tokenized assets in the housing market is going to be a revolution, I think, when it comes to overall trading of that asset class. And that, I mean, if Opendoor were to turn into a tokenized real estate platform, I would say there's a thesis because that is truly asset light. That is what Robin is trying to do. Coinbase is trying to do. BlackRock's trying to do. If Opendoor went that route, I would be like, yo, that's really cool. Then they would have to become an exchange. I mean, they would have to completely flip the business, but that would be a real pivot that I would be excited about. iBuying is not that exciting. The put premium on Palantir is crazy. That is correct. Again, there are people that are buying up Palantir puts. Let's take a look at some of the volume on those puts today. Palantir down 4 or 5% over the past week. That is going to increase the premiums. Selling puts also have good premiums. Obviously, the risk with selling is that if Palantir goes down, you would have to take ownership of those shares. But yes, the put premium should be up there. If we go to August 22nd, puts, yeah, they're all up like 30% on the day. 170 is $2, 175, $4, 180 is $7.25. Again, I'm not against selling puts on Palantir. You just have to be ready for your risk tolerance. Like if you sell a 170 put and Palantir goes below 170, you're gonna have to buy $17,000 worth of Palantir at 170. And so you just have to be ready to take ownership of the shares on any stock you sell a put on. But obviously these premiums are not too bad. All right, so those are my thoughts on Opendoor. Those are my thoughts. We gave this guy a chance, listen to some of his ideas. And again, I don't hate the guy or anything. I don't have a vendetta against him. I just I'm seeing what he's doing in building this community, and I think a lot of it is built on pumping and dumping. I don't think a lot of it's built on a real idea because we just listened to him for 20 minutes, and the real idea was AI can inspect the houses better, and I think he said AI can make the process smoother or something. That was like the exact word. Like, that's not a guy who's serious, who has a plan. He's just bullshitting, in my opinion. But if the stock goes up, then no one's going to care. I just don't know if that easily changes the stock. If you want to buy fractionalized shares of Opendoor Homes, just buy open stock. Yeah, there you go. That's that gives you exposure to fractionalized shares. Yeah, 408 million on Opendoor volume today. That's the other thing, dude. Retail has the reason I like this Opendoor run is because it's great for Robinhood. I would imagine at least 5 to 7% of that 408 million. I'm just throwing this number out of my ass, but I really do think it's happening on Hood. I don't think tons of people with a Schwab account are buying up Opendoor. I think there's still a ton of degens that use Hood, and they're probably aping into it. And if it does go up, great for them, great for Hood's AUC, great for the trading volumes, great for the call option returns or the option contracts that were traded today. I mean, if a significant amount of those are going to Hood or even 10 or 20%, Hood makes a lot of money on the option contracts. So it's bullish for Hood. I just don't know if there's a real thesis on the stock itself. I have a brilliant idea. Become an ETH treasury and make real estate into NFTs and then pump your ETH bag. That would be a more compelling thesis than whatever the heck Eric Jackson just said. Because I'm not tripping, right? He said AI will make the process smoother and help the home inspections on a direct question about what do you mean by Opendoor embracing AI? I mean, that's just not a... If he was going to use buzzwords, he needs to use better buzzwords, bro. He should be like, well, the agentic workflows of how the home should be sold on the marketplace, blah, blah, blah. Like, he could have done a way better job with his buzzword AI lingo. But I didn't get that. I did not get that. Yeah, data centers. We will open the door to data center capabilities. Like there's all that stuff. I don't know. I don't see it. Maybe I'll be wrong. I'm not in it. I don't have a stake in it, but I am curious to see how it ends up playing out. Do you think Jay Powell will really cut rates? Well, let's ask everybody here. Do you think Powell cuts in September? Look, my gut reaction is yes. I think it would be very scary for the markets if Powell does not cut. I think we're going to get a haircut on the market, probably to the tune of at least 5% on the S&P. This market's priced for cuts. If we don't get the cuts, then you got to ask yourself, what are we holding this market on besides earnings growth, which has been great, but earnings growth I don't think is the only thing that we can say is the reason for the market to get its multiple. So I think it would be scary if we don't get the cut. But we're going to have to see, dude. If Powell is bearish on Friday, I mean, that could be a completely different way of navigating the equity markets going into the latter half of the year. 64% of you say we get a cut. 64%. Goldman says 3. Bank of America says 0. So I don't know. Amit, does it bother you when you see Opendoor move but Grab remains flat? Absolutely not. And I'm saying this with I'm not saying this with any level of hesitation at all. I know what I own when it comes to Grab. I understand the stock is not as volatile as Opendoor. I can sleep well at night owning Grab and buying more of Grab here. I bought like 50 more shares today. I think I got it like 509. If I had the position I had in Grab in Opendoor, I'm not sleeping at night, dude. I am worried every day on what's going to happen. Like my peace and my sleep and mental stability matters way more than the volatility of Opendoor. And remember, with volatility comes downside and upside. So with Grab, one of the reasons I like it right here is because I think it's risk adjusted. I think that they have $8 billion in cash and they're flat. I'm like, okay, I think there's a breakout eventually. I have a valuation I think it can get to. I've come to that valuation not by saying AI will help Grab do blah, 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 but legitimately laying out a thesis and saying, I think over the next 2 years, it can get to this price. And I'm happy owning shares at the current price for it to get there. With Opendoor, you're taking a shot in the dark and you're saying, well, it might go to 82. And now this freaking, this Eric Jackson, I forgot to show you guys this. He put out a tweet today and he said Opendoor should be $56 today without rate cuts. Like, to me, I don't want that community around Grab. I don't want that community around any stock that was never the community around Palantir ever. The community around Palantir was like deep due diligence around, hey, like at $7, we were not talking about, oh, this is like a $300 stock. At $7, we were like, dude, can we get to like 15? Is it possible? Can we get a double? That would be success for us. But this guy's talking about, I'm trying to find the exact tweet, but he's trying to talk about, it should be 56 before. So to me, Opendoor running up and Grab staying flat or any stock staying flat, as long as your conviction in that stock is hardcore, that I don't think the volatility of another stock should scare you. But regardless, the volatility of Opendoor obviously is leading to a lot of people getting excited about it. And the sad thing is, the reason I think a lot of people are buying, like, what I'm seeing on Twitter is people just wanting the stock to go up. They're not like, people are buying Grab, yes, because they think the stock can go up, but a lot of the community is like deep into the DD on Grab. And there's some part of the community that's probably just buying it for the hell of it. But with Opendoor, I think it's like 95% of people are just buying it because they see there's hype. And that's a very toxic community. And if it goes the wrong way, you just got a lot of people that are going to be left holding a bag. And it's not going to be the best situation in the world. I trust Open more than Grab. That is totally fine. That's what makes a market. You know, Grab is kind of dead money right here. It's flat. No one cares about it. Opendoor is up and down. So like, people are going to chase what they chase. But it's not just Grab. Any stock that you're in, if it's not moving as much as a GameStop or an Opendoor, like I think last year when Roaring Kitty came back, that's when I officially told myself I'm not chasing stocks again. And I did not chase that GameStop run at all. And if I did, it popped from 65 down to 23. And then it's been at 23 for the past year and a half. I would have been pretty upset at myself if I bought into that. So ever since then, I've just not chased. And I think that's okay. Because I think eventually some people just grow out of it. Opendoor and Palantir partnership would be cool. Dude, I think it would be cool if Palantir partners with them. I wouldn't hate the partnership. I would wonder what the partnership does for Opendoor to get them to transform their business. So again, if it helps the stock do well based on some partnership with Palantir, sure. But then it begs the question, like, what exactly is Palantir going to do to fix a business that has toxic assets on the balance sheet that they can't sell. Palantir can make them efficient in a lot of areas, but that fundamental thesis of the business is broken, and it's been broken for 4 years, which is why Zillow left iBuying. And that's why Eric Jackson is talking about we need to pivot from that. But then when you listen to his response on what we pivot to, there is no response. There's just some random, oh, it needs to be the operating layer. It's like, all right, well, what does that mean? Yeah, is Palantir going to flip their homes? Like, probably not. Probably not. You chased Reddit? No, I got out of Reddit too quick. First of all, I didn't chase Reddit. I was using Reddit for covered calls, and then I sold at 115. You know, Jason actually texted me today about Reddit. He was like, damn it, we got out too early. I was like, bro, we got out way too early. I was scared of Reddit's multiple, and in reality, their growth, I don't know if it justified the multiple, but it justified the momentum. And in this market, if you have growth, you're able to get a multiple. And if you can keep the growth, you're able to keep your multiple. So if Reddit can't keep the growth, this thing's going to get hit. But if it can keep the growth, I mean, 240 now. Granted, it's, I don't know. Are they taking it to 300? I don't know. $45 billion market cap. Like, maybe they do. But their growth is there, which is why Reddit's getting some momentum. Toxic assets are U.S. homes. They have value. No, the homes have value. The question is, do they have enough value for them to be flipped for a margin? It's not like the assets are like never going to be worth anything. But if they bought it for 300 and they can barely sell it for 302, it's toxic to Opendoor's balance sheet. Because what are they supposed to do with this? It's not worth anything. And if it's worth $2,000, that's not a margin, right? So that's what I mean by a toxic asset. And they've had 4 years to try to do something. They haven't been able to show they can actually do. The CEO was selling stock at 57 cents. I mean, obviously internally the culture has been broken on the excitement on this company. That's why I think the new CEO is very bullish, because you need someone to just turn things around. The question is, what CEO are they going to get to try to do that? All right, we got Mike Wilson live. Let's see his thoughts on the market and get some perspectives from him going into Jackson Hole. This is Morgan Stanley's top equity analyst as we approach Jackson Hole on Friday.
Bloomberg Audio Powell will take on Friday.
Yeah, I mean, good morning. I think, it's a quiet time of the year. So, any event is probably going to have a little bit more impact on a short-term basis. I think the expectation going into this particular Jackson Hole meeting is that, Chair Powell is going to remain somewhat balanced because they want to make sure inflation is under control before they start cutting rates. Now, the market is pricing in somewhere between 80 and 90% chance of a Fed cut in September. So what I'm going to be watching for is, does that change after this meeting? Because if it stays at 80 to 90% as we approach the September meeting, the Fed will cut. I mean, they will not want to disappoint markets. So look, our expectation is still for no cuts this year as a house. I think, the evidence is sort of building that maybe tariffs aren't going to have as big an impact on inflation as the chair is thinking. And that should lead to, the greater chance of rate cuts in September. So that's what we're set up for right now. And I think if that were to come down to 50%, that would be disappointing for markets. So I think that's what we're going to be watching kind of on Friday to see after his initial speech and then into next week.
And since you mentioned those rate cuts, so the Fed has been able to digest some more labor market data, the level of unemployment, inflation. Is that all playing into your Fed rate cut bet as well?
That's right. I mean, our economists have been looking for slowing growth and stickier inflation. That's actually played out. I mean, that's exactly what has happened, which is why the Fed has been on hold this year. But I think, as we look out, the risk of slowing labor looks like a bigger concern than, say, sticky inflation.
And that's what Powell has to feel on Friday. He has to signal. Remember last year at Jackson Hole, Powell said, we're not as concerned about inflation. We're concerned about the labor market. And then in September, we got 50 bips. So if you could kind of get that same sentiment, I'm not saying we're going to get 50, but it will at least get 25. And that would put the markets at ease on Friday. But it depends on if he says we're going to focus on inflation more than the labor market.
And we all know that Fed funds rates are too high for most businesses and most consumers. I mean, that's why interest rate sensitive parts of the market have been basically stuck in a recession now for the last 2 or 3 years. So there is appetite to cut rates, I think, at the Fed. They just want to make sure. I think they still have a little, PTSD from 2021. They want to just make sure, and that's the balancing act right now. In the meantime, however, what's really going on is that earnings revisions have been explosive. We've been writing about this, really since April, and that's what's been driving stocks higher. So even in the face of slowing growth, earnings revisions have been fantastic, and companies have sort of done a good job of mitigating some of these risks from the tariffs.
Now, since you mentioned earnings, I mean, let's go there. We have retail earnings. They're going to be front and center this week. We're talking about Walmart, Home Depot, Lowe's, Target. What are you expecting? Is it all about the tariff impact?
Well, that's a great question. So far, tariffs have really not slowed down this earnings train, as I mentioned. But this is the one area where we do believe tariffs could have a negative impact, is in sort of this consumer discretionary area where these companies don't have a ton of pricing power. We're not seeing as much discounting there, maybe from the exporters themselves. So the question is, who's going to eat those tariffs? And this is probably where companies may see some margin pressure. So this is probably the bigger risk, quite frankly, this week or over the next couple of weeks for equities. But that's a very narrow part of the equity market. And as we've said for a long time, my view is that the tariffs themselves will be a shared cost between exporters, importers, and consumers, where those tariffs can be passed on. And when we look out, there are a lot of areas where those tariffs can't be passed on. So that's the risk. It's a margin risk, and this is the part of the year, the third quarter and the fourth quarter, where we'll see some of that margin pressure. But it's very idiosyncratic, right? So it's not as big a risk for the S&P 500, but it is for individual companies.
So Mike Wilson still remaining rather bullish on the idea that rate cuts are coming if Jay Powell focuses on the labor market more than anything else. By the way, Palo Alto after the bell still up 5%. So it looks like the call is going okay, and that one's holding its momentum. And he expects a rate cut. I mean, that's what he said. He knows the Fed has been focused on inflation, particularly from tariffs. But even Powell said PPI might be a one-time price increase. Now, we've got to see if that trend continues. But if it is a one-time price increase, he's going to look really weird not cutting in September when you get the new PPI. And if that PPI comes in line with expectations versus accelerated, I mean, a lot of people are going to be upset. I mean, there's a world. I mean, here's a question for everybody. Do you think Trump would actually fire Powell if he doesn't cut in September? Like, not just threaten it, but this time legally try to go after it. Do you think Trump would try to fire Powell if no cut? Because I think there's a world where he says, get the lawyers on the phone. We are getting this done. We are not tolerating this for another 5 months. And I don't know if it would be something that's feasibly possible, but I feel like July, the Fed was like, we're not going to cut. I think Trump was like, whatever. September, I think Trump's really expecting a cut. And if they don't get it, I think he gets upset. He will send him to Putin. Oh my gosh, dude. Trump did make a good point today during the press conference. He said, the media was upset at me that I embraced Putin with the red carpet and had him drive in the limousine because they thought I was legitimizing him as a dictator. But the media would have been mad at me if Putin refused to come to Alaska on U.S. soil and actually meet with me. And I was like, he is 1000% right about that, dude. In some cases, he just can't win. The guy's trying to get a deal done to try to end a horrific war, and the media is upset that he's having Putin in the limousine because he's embracing him. I'm like, well, what if Putin decided not to show up? What if Putin didn't even want to have a conversation? I mean, like, then you would be like, oh, this guy can't get him to talk. What fantastic deal maker are you talking about? You can't even talk to the guy he's trying to make a deal with. So I think he's been in a lose-lose situation with the media. And based on some of the reports we saw today, I do think the Europeans and Ukraine are ready to get something done. But you can't blame the guy for meeting Putin. I mean, like, at the end of the day, he cares about getting, and again, I've critiqued Trump many times. I've praised Trump many times. I don't even think it's political to say, to get a deal done, you have to meet with the counterparty. And the fact that he was willing to come to the United States to meet him means that he wants it. Now, is Putin still going to be ferocious and try to get, of course. But if he didn't want to even think about getting a deal done and just keep fighting, I feel like that would be net worse. And so it seems like there is some progress that we're getting on that. All right, Bloomberg is reporting some stuff about the meeting. The Trump meeting is officially over, says Zelensky's spokesperson. Zelensky's spokesperson said the talks may continue in different format. Okay, so we got those updates. I think we have another update right here. Let me see if I can pull it up. Trump interrupted the meeting with European leaders to call Putin. Okay, so during the meeting, which has officially concluded, apparently Trump interrupted in the middle, which is not like a negative thing. He said he was going to be calling Putin, and the European leaders want him to discuss this with Putin. So I would say in the next few hours, we're going to start getting reports on what the call was like with Putin, what the European leaders were briefed on, and what Zelenskyy was briefed on after hearing what Trump had to say with Putin. And then if we have some serious dates set up for Putin and Zelenskyy to actually have an official conversation. But it does look like today we really did get some progress. I mean, like I was a little bit worried this morning. Was it going to be okay? Was it going to be a blow up? It seems like they were laughing. They were enjoying. They had a dinner with everybody together. Like it did not seem like some scary event today. And this was the first time in a while that you had France, Germany, the UK, the NATO secretary, all these people coming to the White House at the same time. And at least based on what we saw in these lunches, the meetings were productive. So there you go. Dude, do I really not say the T on Putin? Does it really sound like Putin? I feel like I say the T. But everyone says I don't say the T. It's Putin. Okay, now I actually said the T. I consciously tried to say the T there, so I see what you guys are saying. Hey, Amit, I have $25 covered calls on SoFi expiring on Friday. Don't want it to get called away. Think I'll be fine. Yeah, I mean, look, until it gets to your strike price, I think you're okay. So if it starts creeping up on 25, then roll it. Roll it a couple weeks. Try to get up to 27, 28. The good thing about covered calls when you're still away from the strike is you have time to roll. So if your covered call was 25 and SoFi was 35, you're underwater. Or if even SoFi was 30, you're underwater and it's harder to roll. As soon as it approaches your break even, so let's say you got $1, so your break even is $26.50, then you just roll it. You get unemotional about it. You maybe give up some premium. You're probably not going to have to pay a debit because you're within the 5 to 10% range where you can get a credit. Even if it was 20%, you could still get a credit. You would just have to roll out a couple more months. And you can roll it a couple weeks and probably keep it at the same price or get it to like 27, 28. Also, breaking 25.50 would be a massive move for SoFi because 25.10 is resistance, 25.11 based on the all-time high that it hit after earnings. And so breaking 25 itself would be important, and then 25.50 would just be icing on the cake. So if that does happen, it's not a horrible thing to roll it at that point. I do the same thing with Button. I don't say the T's on Button. Oh shit, it does. It does sound like Button. What is up with the T's, bro? First it was the S and the H. Now it's the T's. All these letters, bro. All these letters. Dude, people really hated my take on it was a hot take, so it was meant to be. We talked about it yesterday, but people hated this tweet, bro. There are so many people that were like, years from now, if anyone says it was their top, just show them this tweet. I just disagree. I understand it's a hot take, so I get why people are exaggerated about it. But I think there's a legitimate argument where the American dream is no longer getting equity in a home, but it's rather finding a way to get equity in the assets that are growing. Now, look, if NVIDIA shits the bed over the next couple of years and AI falls apart and there's no growth, then yes, obviously the AI bubble will burst. If that does not happen over the next 5 years, I mean, again, there is a world in which dollar for dollar, the better returns might not be in the housing market. Help me convince my parents of this. Boomers refuse to believe this. I think you got to show them the numbers. Like my mom used to not believe it, but now my mom is like, she's kind of happy I'm not buying a house, dude. Because like, she's just like, I don't want you to have to deal with a house and be stuck in it and property and maintenance and all this stuff and just deal with all the things that come with home ownership if you don't have a family. If you have a family, it's different, especially if you want to like, set down your roots with your wife and kids or something like that. But I think a lot of people that are single are thinking, hey, how can I acquire equity and ownership in the greatest market that we've ever seen and be able to live within my means while that equity appreciates, and then in the future, be able to then get ownership in a house. Again, I don't think it's I think there's so many perspectives, and Steve and I talked about it for a long time last night. There's so many nuances to it, but I am seeing more people question what is the point of a house. I get both sides of the coin. If I was single, then I would rent, but I have a family that we want to have a home to call our own. Yeah. Like if you have a family and you want to have memories with your kids in the backyard, like it's a totally different dynamic from if you're single and you just want to increase your personal wealth, right? Like if you don't want to rent with your kids because you want them to be able to play outside in a safe neighborhood, that's a totally different dynamic. But there are people that are not getting married, do not have families, and they're asking themselves, why am I putting a down payment on a home just to say I'm a homeowner if what I care about is my net worth going higher in this home, although it's way safer than the market, than crypto, whatever else, it's not necessarily appreciating at the levels that I want it to. But I think the reason it's a hot take and the reason people get triggered by it is because a lot of people don't invest, right? And so when people don't invest, they think of the home as like the quintessential thing they need to do to progress their life to the next level, right? It's like college, job, significant other, kids, and then house, like, and then car. You get all those things, you're like doing well in life. But for people that invest, I mean, someone yesterday on the chat on the Future Show, the guy has 9,000 Tesla shares at a $44 average, and he's renting. And he's like, I don't want to sell any of my Tesla to buy a home because I think Tesla in the next decade is going to do a lot better than a house. And I'm totally comfortable renting. If he were to even sell covered calls on 10% of his position, he would be able to meaningfully pay off like $3,000 per month of rent, which is, or even, you know, let's say your rent's like 5,000, like a really high rent, like the covered calls, given the volatility of Tesla, could pay for that per month. And if you're able to have another source of income without having to even touch that Tesla position, and you can pay rent, but that position in and of itself is appreciating, and you have a margin of safety at $44, does Tesla go back to 44? I don't know, it's gonna be hard to see that happening. Then that might be better than selling those Tesla shares to buy a house. So I think it's just different perspectives. It's an extremely hot take. I meant it though. I do think there are more people that are thinking a house might not be the best use of their capital. But we're going to see over the coming years. I mean, we got to see, can this market actually continue to maintain its momentum? And obviously NVIDIA's earnings in a couple of weeks will also continue to let us see if that happens. The market isn't usually like this. Yeah, I agree. I mean, I'm the first person to say the market is weird how resilient we have been, but then I'm also analyzing why. Like either we're resilient because this is the greatest bubble ever and it's going to pop and it's going to be dramatic and we're all going to lose a lot of money. Or the market is like this because this is a once in a lifetime tailwind that is happening right now while we're alive. We're seeing the ramifications of this tailwind and we can't even really comprehend the way it's going to grow. And as a result, the market's paying a multiple for that. It's one or the other, in my opinion. And we're going to have to see how it ends up playing out. I could have bought 3 houses if I put everything I put into the house into Hood at the beginning of the year. Yeah, I mean, like obviously, if you made a really good pick at the beginning of the year and that did well, you could sell that to buy a house. But it's just a question of seeing how that plays out. Or you can make your money in the market and buy a house with some of the gains. Well, that was actually the point of my tweet. The point of my tweet was like, hey, the market is a vessel. Like the point of my tweet is not anti-home ownership. I want to own a home one day. The point of my tweet was like, hey, in the next 5 years, if you can rent and NVIDIA or insert whatever stock does way better than a house, then in 5 years, if you can wait 5 years, if you're single and then buy a house in 2033 or 2030, because of the gains you got on the stock market, you got to give it some time, right? To be able to actually get those results. Then that's kind of the way to play it. Versus in the middle of this bull market saying, I'm going to take equity out of the market, unless this is a top, I don't know. But if it's not a top, taking equity out of this market, putting it into something that's not going to appreciate like an NVIDIA might over the next 5 years. And then it's just like, okay, I could have waited 5 years and rented and then bought a really nice home. But instead I bought a home for the sake of buying a home. That was more so the intent of my tweet. But obviously there's a lot of nuances as well. What if you aren't selling any stocks for the down payment and will still be investing in the market while owning the house? Well, look, if you are privileged enough to have the disposable income to be able to make a mortgage and have money to put into the market every month, then obviously you're in a different situation, right? The average person kind of has to make a choice on like how much money can they seriously allocate into the market versus their mortgage, right? And because they also have life expenses they have to deal with. And so my point is a mortgage tends to be on average 2,500 to 3,500, right? If you were to able to put that money into the market every month versus the mortgage, because again, the reason you're putting in the mortgage is to gain ownership and equity in the house. Well, if you're gaining ownership and equity in another couple hundred shares of NVIDIA every other month, the question then becomes which one outperforms. And I think over the coming years, we're going to see, how that ends up playing out. But yeah, that was the extent of that tweet. We are in a multi-generational event, but life-changing moments like this, you might get 3 to 4 cracks in a lifetime. You'll be old enough to take a hold of 1 or 2. Yeah, I agree. Like, dude, here's the other thing about AI that's so important. In our lifetimes, let's call it the next 50 years, will we have another moment like AI as a tailwind for the markets? And what I mean by that is, will we have another piece of technology that is able to encapsulate the imagination of the world, that's able to build thousands of new startups, that's able to get the type of CapEx from the hyperscalers that have unlimited balance sheets to be able to allocate, and that is able to fundamentally transform every aspect of our lives, whether it's self-driving, robotics, drug discovery, personal assistance, etc., to create the greatest level of productivity gains that we've seen ever. I mean, I don't know, dude. I don't know in the next. I'm not a psychic. I can't figure out what's going to happen in the future. I don't know if most people did not see AI coming and then it just came and we all had to deal with it. But if we don't get that opportunity again, then that's also why this market's very enticing, because you need that type of long-term tailwind. In the market, you had, or in the past 20 years, you had the internet, then you had mobile, then you had cloud computing, and then after cloud, called it from 2015 to like 2019, it's relatively flat. There was nothing that exciting. Like nothing was going on in the world that was like, oh my goodness, this is amazing. You had the EV stuff with Tesla. That's when Tesla 20x'd. But now you have AI. Some people are saying space and quantum. I definitely think space is an opportunity. I don't know how investable that opportunity is in the context of AI. What I mean by that is obviously there's stocks you can invest in that give you exposure to space and the commercial TAM of space. But is space going to infiltrate every single part of our economy? AI, theoretically, the promise is it infiltrates every single part of our economy, which is why the entire market, even the S&P 493, are getting a multiple lift because the Mag 7 are doing the heavy lifting of embracing AI and then permeating it throughout every part of the market, which eventually, if we see the market grow into this multiple, we're going to see more companies have better earnings growth because of AI. Space, there will be winners. I don't know if space is going to directly impact every part of the market, unless you start having manufacturing in space, you start getting energy from space, you start mining gold in space or some crazy, like if you get all that stuff, that could fundamentally change the dynamics of the economy. But it feels like AI is the tailwind for every part of the economy is something that's going to be hard to see. I feel like robotics is part of AI. Like for robotics to be useful, they're going to need to be intelligent, right? And that level of intelligence likely will happen via AI. Is Chamath launching a SPAC? Why are you guys saying Chamath's coming out with a SPAC? Oh, hold on. We got some Ukraine deal. Hold on. Ukraine. Whoa. That's holy moly. Ukraine will offer President Trump a $100 billion weapons deal in exchange for a security guarantee. The deal would include Ukraine promising to buy $100 billion worth of American weapons and would be financed by Europe. Whoa. That, I did not know there was money attached to the security guarantee. I thought the U.S. was just giving the security guarantee, but apparently there's some money attached to it. Let's get some coverage on this right here.
Offered a $100 billion deal to buy U.S. weapons in exchange for security guarantees against Russia. What do you make of that? Comey, it seems like President Trump is he's going past everybody, he's zooming past everybody now.
Well, I think, the auto pen that we had in the White House was not able to come to any of these deals. You didn't have the other leaders of the free world that are willing to work with our former President Biden, but you are having them absolutely because of the strength that Trump is showing. Give the president credit what credit is due. He is pulling together these people at the table because they recognize that millions of lives are being lost and they want to come to a peaceful resolution. And
That is the headline right now, folks. Ukraine offers $100 billion weapons deal. This is from the Financial Times. That's the source on this. I also think Reuters is contributing to it. To win a security guarantee. Dude, how are defense stocks doing after ours? Lockheed Martin, that's up a little bit. Raytheon, that's flat. And Palantir, that is flat. Rocket Lab is also flat. Well, Rocket Lab's up almost 1%. So the defense stock's not doing much on this, but $100 billion of weapons. And Ukraine's not paying for that. Europe's paying for that. What types of weapons? Drones? I have no idea. I would imagine drones, artillery, military equipment. It would be a host of things. But Europe's paying for this, not Ukraine. And that is the extent of the details we have right now. Wow. Did not expect this. Europe already said they're paying $750 billion for energy. And then they said they're going to privately invest $600 billion. Now they're saying they're going to finance a $100 billion weapons deal. We don't know if this is over 10 years, over 5 years. I mean, we have no details on this. But if we got $100 billion out of a security guarantee, I mean, that's a pretty good deal to me. That's not a I don't see the issue with that type of a deal if that is the case. It's only an offer. That's fair. It's only an offer. I don't know if Trump rejects a $100 billion offer. Dude, when I listened to the press conference today, Trump himself guaranteed a security guarantee. He said, we will absolutely be giving Ukraine a security guarantee. I didn't think there was any condition attached to it. It makes sense that there should be some condition. But if the condition is a $100 billion weapons deal, which makes sense because if the United States is going to protect Ukraine, they're going to need weapons and soldiers and all that stuff. So you're going to need some money to do that. And the taxpayer should not flip the burden on that if Europe can help finance it. And it seems like that could be a deal that's happening right here. By the way, at the same time that this news is breaking, Chamath has filed a $250 million SPAC called American Exceptionalism Acquisition Corp. I have been defending the market not being toppy. I cannot defend that. That right there, for everyone who's been saying top, there you go. There's your top. I mean, I don't know what to say about that, dude. I do not like seeing that shit. I don't know what to say. But I don't like Chamath starting a new SPAC, dude. I don't like that happening. That is weird. What is this? American Exceptionalism Acquisition Corp is a blank check company incorporated as a Cayman Islands exempted company and formed for the purpose of effecting a merger, amalgamation, share exchange, asset acquisition, share purchase, reorganization, or similar business combination with one or more businesses. All right. So Chamath is back with the SPAC. There you go. August 18th, 2025, 250 million, 25 million shares, 250 million divided by 25 million. We are back to a $10 blank check company SPAC that anyone can buy, and then Chamath will get on CNBC and pump up whatever company he's merging with. That to me, I can't defend that. I'm sorry, I can't defend it. I can defend the S&P multiple. I can defend earnings growth. I can defend AI is not a bubble. I cannot defend that shit because Chamath is too rich to be doing this. He is too wealthy to be concerned about democratizing the access to the private markets that you and I don't get the ability to be able to trade. To me, he's full of shit, dude. I mean, I'm sorry. I respect the guy in certain respects, but I think when it comes to offering things to the public, he's full of shit. And I feel like there's some legitimacy behind saying that. He absolutely fleeced millions of people with Clover, with Opendoor, with Virgin Galactic, with SoFi. SoFi ended up working out, but still, he got out of his stock at $18, $19 before the thing went down to $4. I mean, I don't know, dude. That stuff is not exciting to see at all. And it's actually very scary because whatever company he takes public, is it going to be worth anything meaningful, or is it just going to be using retail as exit liquidity, which is what we saw back in 2021? And so we're going to have to see how this one ends up playing out. Dude, if Anduril merges with it, I will not be touching that SPAC because Anduril does not deserve to be taken public through Chamath's American Exceptionalism Acquisition Corp. It's probably going to be some drone company or some defense company. I really doubt it would be Anduril. Anduril is going to IPO at like $100 billion market cap, so I doubt it's them. But it's going to be some defense name that he's going to try to pump. And now he has the All In podcast, which is the #1 podcast in the world to really pump it. And Jay Powell and David Sachs will go along with it because that's their best friend. And they're going to let him pump some, in my opinion, probably stupid idea. Because, dude, if you need to take a company public through a SPAC and you need to get people riled up about it, it means the company is having a hard time going public and they're resorting to the person who scammed retail in 2021 with like 7 different names. If that's the person you're going to use to go public, it means you probably don't have a lot of demand. And if you don't have a lot of demand for your shares, then you're appealing to retail for liquidity. And that's the problem. And see, that scares me about this market, because when you have that type of stuff happening, then you have people saying, okay, there's enough excess liquidity out there to really pump up assets artificially, which was the problem with 2021. So I don't know. I hope that doesn't happen. I will not be participating in the SPAC. Maybe the SPAC does really well. Maybe Chamath redeems himself. Maybe it's one of the best companies in the world and it's like a legit company. They're profitable, yada, yada. But historically, that has not happened. AK Media is not merging with the SPAC. That is not going to be happening. But it looks like there will be some company. Also, didn't he tease this 2 months ago? He did a Twitter poll of if he should start a SPAC or not. And it was like 70% of people voted no. And then he responded, I heard the criticism, but I'm still going to do it anyway. I'm like, okay. And look, there is a chance to redeem yourself if it's a really good company. But just knowing his history, I mean, you can't blame people for being skeptical that it might not be a meaningful company. All right, so that's what we got with the SPAC news. The big news right here is Ukraine offering $100 billion of American weapons funded by European aid in order to receive security guarantees from the United States. Financial Times citing internal documents. That is the headline, folks. After the bell, I think that would be really incredible if a deal like that could be achieved. And then again, so what Trump hinted at today, he didn't exactly say this, but he hinted at it from when I was listening to it, that Putin is okay with the United States giving Ukraine an unconditional security guarantee as long as they don't allow them into NATO. And so if the compromise is Russia gets some of the territory they have already seized, Ukraine gets an unconditional securities guarantee, Europe is financing the security guarantee, and the war comes to an end, maybe that's the deal. Maybe that is the deal that Trump's trying to work out. Which depends on if Zelenskyy is willing to give up some of that territory. But it seems like that could be how this deal ends up playing out. Yeah, the war is still going on right now. That is correct. They are fighting right now on the battlefield. They have not engaged in a ceasefire. Trump even said today that we can't stop them from fighting because they're going to keep fighting. But if we can get an end to the war sooner than later, then that would be the best. So there is no ceasefire yet. But it looks like a full end to the war is what at least Trump and the Europeans are really going for. All right, so there you go. 2 of the headlines after hours that seem to be the most important in regards to Ukraine offering money and Chamath out with a new SPAC. There you go. That's what we got. All right, folks, that is it for me. I will be back on the Tech Bros podcast with Roy and Tanner tonight at 9:30. We will talk about Hood. We had a bunch of different news updates on Hood, so we'll get into that. We'll talk about NVIDIA. We will talk about Sam Altman's comments. We'll talk about the short thesis on Google that Chris Camille put out today. And Roy kind of agrees with Chris Camille's thesis on the advertising ROI not being there. Tanner disagrees. So we'll see if we can get into that conversation. And we'll try to touch up on any other tech stories that we have to get into. All right, that's it. Thank you, everybody. Appreciate it. Means the world. We'll be back probably at 9:31 because of Tanner. He'll be late. And if he's not late, we'll blame him for being late. But he'll probably be late. He ends up actually being late. Last time, it was Steve's fault. It was not Tanner's fault. But it ends up being Tanner sometimes. And I'll see everybody tonight. Steve might be there. He might not. Steve was on last night, though. I spent like almost an hour and a half with Steve. So for those that didn't catch the Steve podcast or the Steve part of the future show, you can just go to the chapters from yesterday's show. and you can get some of his thoughts on the market as well. All right. Thank you, everybody. Appreciate it. I'll see you guys later on Tech Bros. Bye, everybody. Have a good one.